A Forex chart, British pound to US dollar, provides an example without volume. It's helpful to take note of some macro features, the big picture, where there was a steep downtrend, and ever since the market has settled into a wide range, where some ranges of support and resistance have been marked using the same core principles of identifying support and resistance. In a shorter term context, the market has been unable to get back into the resistance area and forms a likely downswing back to the initial support area. It is indeed a return back to the lower boundary where there is a flatter but still declining range. So support is definitely opposing the downtrend, but it is under heavy pressure as the market is able to go through the lower boundaries here. In fact, this turns out to be a minor pause before the drop continues. Later, the market forms a minor uptrend and in the process demonstrates role reversal, where this former resistance now offers support as the market remains flat to slightly bullish. The bullish price action on a near vertical climb is more than adequate, even without the presence of volume. If there was a volume, this would likely show some large increases in green bullish volume as well. Aggressive bullish price action that is both strong and consistent to easily pass this lower range of resistance. Similar to the Spotify example earlier, the aggressive uptrend can't continue for an indefinite period of time, especially on a near vertical climb. Just like any other chart or market, the transition to neutral and slightly bearish price action in the short term is natural to relieve selling pressure and shorter-term bearish sentiment. This stabilizes the trend on a more moderate trajectory. Later, it reaches these upper resistance ranges once again, where the market exhibits some minor pausing prior to the peak here with a final aggressive push higher. Despite this strength, the market is unable to decisively close over the upper boundary. It does, of course, move over it temporarily, but soon a downswing forms for a decisive shift back into bearish sentiment. Going to a line chart with each dot representing a closing price shows the downward pressure continuing as the market gradually declines below this established resistance range. Successively lower downswings show the market is developing a very stable downtrend. Within no time, the market accelerates for a near vertical drop. These prior lower boundaries still offer support to the dropping market, and these circles highlight the areas where, even though there are no upswings, the market is slowed down for a very short duration. And even without the presence of volume, it is quite clear the market begins to settle down into a period of bullish to neutral trading that is settling down after the rapid fluctuation. Naturally, these same ranges provide an excellent containment area in the subsequent weeks.